%5 deposits, 95% mortgage loans are coming back, guys. Yes, it's true. Mr. Boris here has recently announced that for first-time buyers, specifically buying their first home, they'll be able to put up as little as 5% on a property, which is crazy news because for you first-time buyers, this means you can access bigger, better properties in the most expensive areas like London with a relatively small amount of money, 5% specifically. But is this necessarily good in the long run for you guys? Well, let's find out in this video. But first, if you guys like what you see, make sure to like this video, share it too, and subscribe with the notification bell on as well, so that you don't miss out on any more new content like this one right here. And if you guys are on Facebook and want some more content throughout the week, then make sure to join my DS Learn and Finance group that I recently started on Facebook. Links in the description box below. So back to 5% deposits and 95% mortgage loans. The most glaringly obvious benefit here, guys, I previously alluded to, is the fact that it allows first-time buyers to get onto a property ladder relatively easy, guys, especially in the most expensive areas, which is critical at a time like now. With the way current stamp duty holiday is driving property prices upwards, guys, first-time buyers need help now more than ever to get onto a property ladder, just because there's so much competition around. I did mention this earlier in my latest stamp duty video, guys, where I discussed this along with other major disadvantages surrounding the whole stamp duty holiday, guys. So if you guys want to find out more on that topic, then go down the description box below, because I've left a link for that video down there. But not only do I see this, it's clear to see now that Boris and the rest of the government have also noticed it too, which is why they're offering this 5% deposit and 95% mortgage loan for first-time buyers specifically now. But what they fail to recognize is that history always repeats itself. This was the main contributing factor that led to the 2008-2009 market crash/recession in the UK economy. The banks were simply lending out more than they could afford, guys. And what you have now with first-time buyers putting 5% deposits on properties and taking out 95% loans is that you're putting the UK economy further down that market crash/recession hole, guys, which I believe, in my opinion, is inevitable. But what you're doing here is you're speeding up the process. So then the question shifts to, is this helping us? Bluntly speaking, guys, for investors like myself, we look forward to a recession, guys, because we pick up the best bargains during recessions. But for the general economy, is this beneficial for them in the long run? There's also the added issue of negative equity, guys, which is never a good thing to have, because it means that your mortgage loan far exceeds the current value of your property. Effectively, your property's gone down in value, guys. And a lot of reason why them people find themselves in negative equity is because they take out high LTVs. They take out high loan to values on a property. And guess what? This 5% deposit, 95% mortgage loan, that is a high LTV right there. So what you can find is that first-time buyers will get themselves to negative equity really quickly, guys. Because yes, we know that property prices go up over time, but we also need to respect that they move up and down while they're going up. So if you're taking out a loan and then your property goes down, you're going to find yourself out of pocket really quickly. If you are a first-time buyer and want to try and minimize your chances of getting yourself into negative equity, and I made a video recently on this, guys. I've left the link down in the description box below for you guys to check out that video there, because there are things that you can do to minimize the chances of this happening. As you guys can see, this 5% deposit and 95% mortgage loan that Mr. Boris here wants to introduce for first-time buyers just doesn't affect them. No, it affects the whole economy, guys. Speaking as an investor myself, in general, I believe it is a good thing because it means that first-time buyers can get onto the property ladder relatively easy and drive demand up for properties, guys. And also it means that it's going to speed up the process towards a market crash, upon which as an investor, I'm going to make full use of, grab bargain opportunities. So it makes sense for me in that manner. But for another person, it can be the complete opposite. It just depends on how you're looking at the economy, guys. The key part is just understanding what the major effects are, which I hope I've helped you guys on in this video. If it has done that, then make sure to like this video, share it too, and subscribe with the notification bell on as well. It will help tell me that I'm doing a good job out there. It's your favorite YouTuber, DS Learn Finance, sharing my stories and my thoughts with you guys out there every Sunday at 3 PM. Have a great day, people. Bye.
Whoa.